Hello, this is the TradeSight U.S. Stocks and Futures Market Preview and Domestic Data Roadmap for economic numbers for the week beginning Monday, the 3rd of February 2014, ending on Friday, the 7th. Hope you had a great trading week. Here's a look at the S&P daily chart. A couple things to consider here. First of all, knock out these last 5 days. We were, last weekend, I put the report up, we were looking at this big down bar on Friday. I mentioned that I thought the target for the week would be this red line. That's our static trend line of this 9-bar setup startup phase right here. Sure enough, basically got right there and held. That's pretty amazing. So let's talk a little bit. Now that January's over, put sort of this last couple months in perspective here. First of all, we're right where we were in middle of November. We talked about in November the fact that that's usually the point right around Thanksgiving, where if the market's up a lot for the year, a lot of stocks are up, that there's just no sellers. People don't sell. They don't want to lock in the tax gains. And so you tend to get a surge late in the year into that scenario. And so even though we got this 13 sell signal on the S&P, it's kind of suspect of that turning into much at that point last year. I still thought it could lead to a rollover once we cleared the end of the year and people were free to sell for tax purposes. So we got this 9-bar run up the last 9 days of December. It was exactly the last 9 trading days of December. This is from the point where the Fed announced that they were going to loosen up their buyback. And so here goes the 9-bar setup on the last day of the year. We've got that. First 2 days of the year were Thursday and Friday after New Year's, so that was sort of holiday environment. Still, volume was very light, but there's the old rule that if the first 3 days pick one direction of January, the rest of the month tends to go the other way. And in this case, the first 3 days, even though those first two were light volume, were down. So the question is, was that old adage going to hold? And we did kind of head higher initially. We started to break down at one point. We got options unraveling that took us back up. That was this day right here that reversed that move. That was actually on a Tuesday. That came early. A Wednesday gives you the high water mark for the month, Thursday, and then Friday. Then we roll here Monday, Tuesday, so Wednesday, Thursday, Friday of last week. So again, there was a short week there. So it was Tuesday, Wednesday, Thursday, Tuesday, Wednesday, Thursday, Friday of last week, and the big bar down was Friday. And now we found some support right here. So this is a real important level. First of all, it's the static trend line. If you were looking at this 13 signal back here as a sell signal, and you recognize that there were some extra factors here, which is that nobody's selling in the last 2 weeks of the year, that's a holiday environment, that we're very light on volume, any buying pushes the market considerably higher, that 13 sell signal really comes in after that. If you look at that, we've had this move here. We've landed right on the static trend line, which did come from after that point. This is going to be really important from this point. Is this the sell-off that occurred just to let people sell their positions that wanted to sell them, and they couldn't sell them back in December because they didn't want to lock in the gain? Or is this the start of something bigger? And breaking this red line is going to be what signifies that, if there's something bigger going on. And that's going to lead us back into at least this 1700 level and more. So it's going to be real interesting to see where we go from here, but definitely that red line is the line in the sand. Here's a look at the NASDAQ 100 at the same time. Obviously similar characteristics. It was up a little more in the middle of the month of January. It has not yet hit the red static trend line that comes from that same move, essentially, but it certainly has rolled over in the last week and a half. So it'll be interesting to see where we go from here. We'll look at some of the other indices. The SOX now under its short-term moving average gave up the highs of January pretty quickly. The biotechs, and this was interesting, look at the run they had in January from the start. As soon as everybody got off that vacation, boom, the bios ran. 2 big days down, almost back to highs on Thursday, and then back down a bit on Friday. So the bios are still strong, and keep in mind, as go banks and biotech, so goes the market, as the old expression. Let's take a look at some of our bigger trading stocks. Apple down this week on earnings, back closed right at 500, 560 cents. Has not gotten a close under 500 since the news, and it's interesting. I think they're trying to hold that level, because if they lose that, there's a lot of gaps to worry about. First down here at 460, and then ultimately I think on Apple we're going to see that 370 level again, which is a big gap fill we were targeting. We had 2 gaps we were targeting last year, $420 and 370. We got to the 420 last year in the big pullback. I still think 370 will be in play at some point in time. Meanwhile, Google went the other way, earnings and the sale of Motorola to Lenovo, and the announcement of a semi-interesting stock split has got Google at new highs. And still going. This is pretty interesting right here. Amazon got hit this week on earnings, down on Friday finally. And notice our 13 sell signal back in December. The risk line contained it, and the earnings finally killed it. And look out if we're going for that static trend line below here, the red line on Amazon. Here's a look at Netflix closing out at highs on a big gap up. The day that the market was really down last week, Netflix gapped up 75 points on earnings. So I had a friend who said that the gap in Netflix and the gain there offset the whole loss in the rest of his portfolio. But I still told him, why are you holding a portfolio right now? You're crazy. Okay, let's take a look at the intra-week action. Here's a look at the ES. This is our S&P E-mini futures. You'll notice that we did not get anything towards an actual Comer count this whole week. I thought that's pretty interesting. We got some 9-bar setups that the market kind of did not much with, but only 2 of them to the upside on 10-minute bars. This is on 10-minute bars. And you'll notice that really this whole week is only in about a 26-point range on the ES, which isn't huge. If I flip this over to 5-minute bars, I just wanted to point out we got a Comer. We had a call today on our future subscribers. We got a call on the 5-minute ES. We got a Comer 13. We actually got a sell signal right here. It's the only 13 of the week on the 5 or 10-minute charts, and look how far the market came in right after that. So, you know, not seeing these signals is kind of boring. We'd like to have more of them. Haven't had a lot in January, but we got one, and it certainly led to a nice gain in the futures. And if you're going to do anything, hang around and wait for those setups, because they're certainly, I think on the ES 5-minute chart, when the Comer pops up, it seems to be more like an 80 to 90% winner. Here's the NQs for the week. You know, again, this is pretty flat action, and we had earnings this last week. Let's talk about what we've gotten past. We've gotten past core earnings for the fourth quarter here in the last 2 weeks. We've gotten past a 2-day Fed meeting. We got past a big snowstorm or two. We got past some key data. We're getting past the Phoenix Open and the Super Bowl this weekend, which a lot of times cause a lot of travel. February markets tend to pick up after the Super Bowl in terms of action. Our volume has been good in the market. Over 2 billion shares on Friday. Again, we've had a lot of days over 2 billion shares. Interestingly, it hasn't translated into great net movement in the indices, which means the futures aren't that exciting, but it is leading to good moves and some great technical action in stocks. So again, we're having a great run on our stock trades. And you know, the last 2 weeks, even when I say that, you know, there's certain days, things are a little different when you're in those core 8 days of earnings. I try to teach people that, but you have to live it a few times to really realize that it's a different environment. We're beyond that now. We'll get back to work. And we also got a 2-day Fed meeting out of the way. So all of this is done. Looking forward, we can get into a more normal trading market for the year once, now that January's out of the way and once we get back from Super Bowl weekend. All right, so let's skip over now and take a look at the data that's coming out this week, because there is a couple of big items, and see what we can kind of prepare ourselves for. So we start out Monday with ISM index and construction spending. Neither one of those is going to be a big deal. Auto and truck sales in the afternoon. Tuesday, just factory orders. By the way, I should mention ISM index is enough to maybe get something going, but not huge. Tuesday, factory orders, that's probably not going to be a big deal. Wednesday, we do have ADP employment change, ISM services, crude oil inventories, a little bit of movement there potentially. Thursday is where it picks up for real. We've got the initial and continuing jobless claims. That's a weekly number before the bell. Trade balance can be a big number, cause a gap. And then natty gas later on, and then Friday, the unemployment rate with our non-farm payroll data. So that usually causes a gap. And you know, Fridays right now, when you're in the summer, Fridays tend to be a little slow. I thought this last Friday was going to be slow just because it's the last day. It was the last day of the month, and that usually is. And so we ended up gapping down and just sort of drifting back up towards that gap. But we still ended up trading good volume, and we still ended up with more than average daily range. So, you know, other than that, I think Fridays can be decent again. It's Mondays that tend to be a little slower because you jump in with all the retail guys done their research over the weekend. The real traders don't take hold till later. This Monday might be a little slow. People traveling back from the Super Bowl and whatnot. Got the Super Bowl hangover, as the game obviously plays late and it's in New York Sunday night. So that's about it. We will see what we get, but I do think that this should be a really good trading week at this point in time. We don't have to worry about the earnings anymore. A lot of big stuff behind us, and even though we'll still have to watch that trade balance number to cause some excitement, and then the NFP data, I'm really looking forward this week. And especially, look, if that S&P cracks that red line that I showed you on the daily chart, you know, and things start to roll, I think there's going to get real exciting. We'll be making some money on the short side. Charts, as usual, for this presentation brought to you by eSignal 11, as it alerts me there to something going on in the markets. And we will be here to help you out making money in the trading lab all week. Take a trial of the services if you haven't already. Have a great trading week.